Hey, I'm Scott. I'm a public adjuster and I have been a public adjuster since 2007. What I'm about to tell you is all about the difference between flood insurance and regular homeowners insurance. Now, if you don't know what a public adjuster is, a public adjuster represents the homeowner. We ensure the policy conditions are met under the duties and responsibility by the insured and ensure you get a fair settlement so you get paid to restore your loss. And that's what this is basically about, is me representing you to get you paid for your damages to ensure that all the conditions are met. What I'm going to do is go over the difference between flood insurance and homeowners insurance so you could see the difference and the reason why we have these different policies. Now, flood insurance is a different policy altogether. It's not covered the same as homeowners insurance. It only covers against the risk of flood waters, such as ocean, if you have a property that's close to the coast, or maybe water that came from a river overflow, or any water that's entrained in the ground that enters the property from the ground first. That's covered under floodwater. Homeowners covers water that's covered in, let's say it's from a pipe, a water sewer, a pipeline, a pipe of water that came and leaked in your house from there. So that's a little different. So we're going to go into flood insurance and see how they differ. All right, what I'm going to go over is the flood insurance and how they're not typical like homeowners insurance, the proof of loss, documentation, structures and limits, advanced policies. Here I have an example that the FEMA sets up how it's determined where is a flood risk and how much of a flood risk there is. This flood risk is determined by FEMA, as you see. Now, this is New Jersey. I'm using as a map for an example. High risk is coastal high risk if you're kind of close to the beach. If you have a beachfront property, they consider high risk. Most mortgage companies will demand that you buy a flood insurance policy to guard against the flood. High risk, it's not as much as coastal, but still the insurance company may have to actually the mortgage company may require that you provide a flood insurance policy to guard against flood. And modern risk, maybe not. It depends on the mortgage company. Low risk is really low, like maybe like 100-year flood that hasn't happened in many years is not likely to. And then undetermined risk, it's not even data that actually shows that there was a flood back then. So that's the different scales that's set by FEMA for flood zone designations. And as you can see here, they have a different shaded areas, and every state has this. You could buy flood insurance, whether you're in a flood risk area or not. You could still buy the policy, but it's as more as if it's required by the mortgage company to buy. The difference between homeowners insurance and flood policy, well, continuous and matching. We don't have continuous and matching in flood insurance, which is set by the National Flood Insurance Program, the NFIP. The NFIP doesn't pay the same as a flood insurance. So what happens is the NFIP is your national flood insurance program, and what happens is it doesn't pay for matching. Matching is only for homeowner insurance, and continuous is for homeowners insurance. It doesn't work the same. Plus, you only get a minimum repair. So a minimum repair would be drywall, and maybe if it has joint compound and spackled, but you wouldn't get paint or wallpaper. That's not covered because that maybe be more related to homeowners insurance. This is just a minimum repair. Must have at least 12 inches of water in a living space, no basements, and a lot of things. Let me say something about the NFIP insurance adjusters that come from catastrophic loss insurance companies. They're not always so educated in this business like us public adjusters, because some of them come from areas during hurricanes to come help adjusting the insurance on behalf of the insurance company, because there's so much damage that there's not enough regular insurance adjusters locally to handle the influx of claims. So they don't really have all this information as much as we do. So if they have to look up some information that's not understandable, but what we do is we're specialists in this area. Consider hiring a licensed public adjuster in your state, and all the states have public adjusters to represent you to get you paid for your damages. So that's one part. That's also about the first floor coverage. When I said no basements in the last slide, I mean, like, as you see here in this first picture where it has like a mailbox, this area is considered the basement in that concrete area, even though it's not underground like most traditional properties. This is the non-living space. So the flood insurance will not pay for this area since it's the first non-living area on the floor of the property. The actual first living quarters would probably be where this wooden deck is here. That is actually the living quarters, and that's considered the first deck. So the water would actually have to reach that deck area before it becomes into the living space. And then the second floor is above that. Now, usually you're probably used to most, if you're from the Midwest, most basements are dug in ground. Whereas if you're on the coast, not so much. They don't have, they want to have a place to park their car and other areas and stuff inside, but so they make their basement is actually above ground. Here's a regulation that kind of is very common in this next picture here on the right. This house was built on columns. Some properties, after they've been restored, the township or city ordinance requires that they be put on columns in order to get rebuild permits, because the flood risk now is happened and there's no possible way to restore it back to the way it used to be. If it hasn't had a flood, you can lift it up if you want to, and a lot of people do, but it may not be required. But the rebuild, sometimes they require them to rebuild it again on top of columns. But as you see here in this, where the columns are, that's not covered if the water causes damage to those stairs in this picture and the area of the columns. It wouldn't start till it gets up to the deck where the porch is, and that maybe would consider to be the first floor of the property. That would be the area that could have coverage where it starts. Of loss, this is really good, important to know. A proof of loss is the policyholder's valuation of claim damages, and it is a sworn statement made by substantiates the insurance claim. Now, this has to be done strictly when it comes to insurance and flood. You have to have it into the insurance company within 60 days, unless it's extended by the state. But otherwise, there's a strict statute that you have to provide a sworn statement that substantiates the amount of loss that you suffered from the flood loss within 60 days. It's important for documentation. Take lots of photos. I really feel like you can't have too many photos. You need photos of everything. Here's an example of a photo. It shows how the water line was about halfway up the door. Got to have a lot of areas where it shows the actual water line. Don't wipe that off. Leave that there because it has to be covered in the photo. But one of the things I noticed is missing when I look at this is it doesn't have a tape measure in there to objectively show exactly how many inches off the floor the water is. And as far as insurance is concerned, I've been doing this since 2007. We really prefer that you have objective data in the photographs, such as a tape measure in the photo will show how much, and maybe a nice close-up shot. So you can read the measurement a little far away, so it can show where it is. It's actually touching the floor where it's supposed to be, and that's important data to know how many inches the water was in the dwelling in the area of the photo. Because it's more like basement, but detached garages are covered if they're used in an area off the property, such as they're up to about 10% of A. Now, if you're using it, as long as you're using it as a garage, you will get coverage. So a detached garage is covered by flood insurance policy, provided it's not used as like a man cave and made into like a living space. So as long as it's made into a standard garage, you'll get the minimum repair, but it will be covered under flood insurance policy. Even though insurance only have a one building policy, the second building can be a garage. Limits of availability for coverage. There is a coverage limits. Coverage limits can be $250,000 for the dwelling and $100,000 personal property max limits. It can be lower than $250,000 for the dwelling and lower for personal property. And I've seen many policies that just sold for the dwelling and there was no personal property. So it can be any numbers, but $250,000 for the dwelling and $100,000 for the personal property. Non-residential, it's $500,000 for the dwelling, $500,000 for personal property. And same thing. And if there is a mortgage on the property and it is greater worth of $250,000, the mortgage will carry the surplus of the flood for the difference of the amount needed. Building coverage, what would be covered under buildings would be electrical, plumbing systems, furnace, water heaters, refrigerators, cooking stoves, building appliances like dishwashers, permanently installed carpeting, permanently installed cabinets, paneling, bookshelves, and bookcases that are attached to the property, items attached to the house, foundation walls, as long as they're part of the property, and even detached garage, as we said earlier, that's all part of the actual dwelling property that's covered. Contents would be your personal belongings is not attached to the property, such as furniture, electronic equipment, personal stuff that you own, a washer or dryer, a portable air conditioner, microwave ovens, carpets that are not attached to the dwelling. And valuable items, this is important to know. Valuable items has a limit, a standard limit of $2,500. And that's all of your personal property. So you may have something that's a specific, most valuable thing that you own. And if it's part of the damage, yes, it is covered as personal property, but all of your personal property can't be over $2,500 for personal property for expensive, valuable items, such as maybe you had this example. Let me put this more specifically, like a baseball that was signed by a famous pitcher. That specifically, the max limit you will get is like $2,500. That's just the basic coverage for that. Advanced procedures after the insurer, the insurance company, determines that the flood is defined by the standard flood insurance program existed and the damage is the insured's property, and insurer should offer an advance for up to the damage up to $5,000. If the policyholder provides photographs and a depiction of flood damage, documentation validating their out-of-pocket expenditures, such as receipts, contractor payments, insurance, and other payments, you can get up to about $10,000. This is about for the maximum. This is just a cash advance kind of thing for out-of-pocket expenditures. Let me make one point clear, though. There is no additional living expense under flood insurance. So if the named peril under flood insurance is a flood, you cannot claim additional living expenses because you have to live outside your property because of the flood. So that pretty much takes care of this. And if you have any questions, you can always email me at meteorclaim@gmail.com. Thanks for watching.